Welcome, everybody. Today it's a very a pleasure talk for me because I have Tom McCullough on the other side. Hello, Tom. Uh,
Hello.
and today it will be a quite special a conversation because it is also not only a pleasure, it's also my honor to have Tom on this next episode of the Global Wisdom Talk. Because his story and his pathway and his career pathway is quite interesting, and he will talk a little bit in a minute about this. And before I forget this, please make a button and subscribe this channel. And before we jump into discussion, please, Tom, give the audience just a little bit overview about yourself.
Sure. Well, thanks, Jan. Happy to be here, and I look forward to the conversation. There's great things happening across this field in not just in North America, but spreading out to throughout the rest of the world. It's a very exciting time to be working with successful families. Well, by way of background, shall I tell a bit about my story
Yeah,
of the founding of Northwood as well?
please.
So, I'm married. I've been married for almost 40 years. I've got two children who are 35 and 32. And we are, of course, on a journey ourselves as a family to figure out what it is that we want to be as a family, how best to accomplish that, not just financially, but all the other important human ways as well. But maybe I'll tell you a little bit about my founding story of Northwood because I think it speaks to probably the rest of our conversation today as well. So I started at an investment bank right out of university, and I worked there for 20 years. I was surprised that I would stay anywhere for 20 years, but it was a very good company and very entrepreneurial, although it was a good-sized company. It was called Dominion Securities, investment firm in Canada, and I am from Toronto, Canada. And it was ultimately taken over by the Royal Bank of Canada, who some of your listeners will have heard of. And it was a great experience. But sort of three things happened to me about 25 years ago. And one is I realized, wow, I've been here for 20 years, and am I going to be here for, 50 years? I don't know. Secondly, I come from a very large family full of entrepreneurs. So I've got 28 first cousins on one side of my family, and almost all of them who work are entrepreneurs. And I was a corporate guy, so I had this desire in me or this, DNA in my system that I thought maybe at some point I wanted to be an entrepreneur. So that was in the back of my mind. And the third catalyst, I would say, for change was that my family 25 years ago was looking for something that I would now call a family office. But then I didn't really know what it was. And what we wanted was somebody who was objective, didn't have a product to sell, didn't have a some particular thing they wanted us to do, but they were knowledgeable about a wide range of things. And I worked at a financial organization, so it's not like we needed investment ideas. We needed somebody to manage all the various pieces, like a CEO would manage a company, all the various pieces of it. And I couldn't find that in Canada 25 years ago. So they say the best entrepreneurs are frustrated consumers. And I was a frustrated consumer. I was trying to find something and couldn't find it. So I thought to myself, well, maybe this is my moment. I've been here for 20 years at Dominion Securities, great firm and great experience. I've always wanted to do something entrepreneurial, and there's a need for family offices, but there really isn't anything in Canada. Should I just go and do this? And it's a good thing that most entrepreneurs are not that smart, because if you were so smart, you thought through every detail, so many things could go wrong, you would never do it.
Yes.
So part of entrepreneurs, I think, motivations are based on belief and passion. And I felt this was an area that was extremely important, not just to our family, but to many other people. And I thought, well, how hard can it be? And of course, it turned out to be very hard, but it motivated me to start. And that was in 2003. So we are 22 years old now. We had zero clients when we started, and we have between 80 and 100 families now.
Mhm. It's a that's a fascinating story, and I will start our discussion, Tom, on two pillars. The first pillar is you are the author of three amazing books. That's Family Wealth Management and these also these two episodes book, what I've called with your co-author Keith, Whittaker, Wealth of Wisdom. And also that was my first touch point to you. You have written in very, very interesting article about the role of an integrated advisor. And it was fascinating to me on the one hand, but on the other hand is there was so many confusion. What is actually an integrated advisor? And if you are agree, can we start our discussion on this role for families? And I will extend my question, what is actually the role or what is the type or the main characteristic of an integrated advisor? And what is it and how distinguish the role or the integrated advisor in regards of the personne de confiance, or here in Europe we will say the conseiller for the family. Can you give us just a little bit of clarification? What is it actually?
Well, let me back up and uh, provide an example of why an integrated advisor might be needed and what it is, and then I'll answer your question about the personne de confiance. And in case anybody is interested in reading the article that you refer to, it's called The Rise of the Integrated Advisor. It was written in the Journal of Wealth Management in July of 2023. It's available free of charge on our website, which is northwoodfamilyoffice.com under white papers. So if people are interested in reading it, it's available there. And in that article, we start with a story about a family we call the Spencers. It's not a real family, but it's an amalgam of many real families. So it is the example. Often when I tell the story of the Spencers to an audience of families, there's many husbands and wives elbowing each other, saying, "Sounds like us." And this is the story of this family is one of complexity, complication. They have a business. They've got a complicated family. It's maybe a second marriage. They've got children who, some in the business and some who are still trying to find their way in the world. They have got complicated tax situations. They've got a partnership with one of their siblings in the business, and it's not going very well. One of their parents has Alzheimer's, and they're trying to figure out, how to get the best care. They have seven investment advisors, all managing different parts of their investment portfolio. They have many, many requests for charitable giving. They've got three homes. They've got a home in the city, they've got a home on the lake, and they've got a home somewhere warm. And somebody wants to buy their company, and they've got to decide what they should do.
Yeah.
So this is a very, very one of the couple is a U.S. citizen with all the complexity that that brings with it. So it's very typical that families of wealth have complex issues, both in the family and in the business and in their financial lives. And I think it's very similar to the idea of building a house. If you're going to build let's call it a luxury home, you can coordinate. You can do it all yourself. If you can know a plumber, an electrician, and a drywaller and a painter, and you want to coordinate them, if you've got the time and the interest and the ability and the wherewithal to do it, you can do that. Most people don't because they don't have the expertise. They've never done it before. And so the what happens often in both in the world of finance and families is that people have individual advisors and individual products, and a lawyer deals with one part of their world and an accountant deals with another, and they've got seven different investment managers. So there's all these individual experts who are helping them, but who pulls it together? Who plays the role of a general contractor? And again, it can be the client themselves, the family themselves, if they are knowledgeable, but often they aren't. They've run a business that produced a product for years. And
Yes,
now suddenly they've got $400 million in liquid capital and they've never dealt with that before. So the article is recognizing that the need for somebody to be the connector, the general contractor, the integrator, is perhaps has always been there, but I think there's more and more of a recognition of it. And even solo practitioner advisors like a lawyer in the desire to help the family probably has broadened their practice a little bit to say, well, maybe we can help with this because somebody's got to pull this together. But in addition, what I'm finding is that this role of an integrated advisor is actually becoming a profession, a separate profession, like a general contractor versus an electrician or a plumber who are specialists.
that's
This person, the integrated advisor, works horizontally across all the disciplines and focused on the family, whereas the other advisors are often more vertical. They're much more knowledgeable than anybody else about their particular field, but who connects the dots? So I think that is the role of an integrated advisor. To your question then is why is it so confusing? Partly because it's really a new role that's been emerging over the last, 20 years perhaps. There's many other terms, but one that you mentioned is the personne de confiance. And my read is that and there's no official definitions of any of these things, but I
true.
think the role of an integrated advisor, like a general contractor, is perhaps is the definition of the core of the job. What do you actually do? You connect dots, you project manage, you are there as a resource, you move things forward. But I think the idea of the personne de confiance is different than that. It's a feeling. People say, this is someone I trust to
Yes,
help us move forward. And I think most personnes de confiance are integrated advisors.
that's true.
Some integrated advisors might be a personne de confiance. So but you can be an integrated advisor, but it takes time for the family, for you to build trust with the family and become that go-to personne de confiance. So that's how I would describe the difference in connection. Does that make sense to you?
Absolutely, absolutely. And I want to jump in and can you give us just a little example? How do you, I mean, from my own experience, I mean, there is a great need for these integrated advisor, right? Many advisors call themselves as an integrated advisor, but in the end of the day, they don't know actually what they are doing, right? And my question will be, on the one hand, there is an increasing interest and also in request. You described this correctly. I mean, there's an increasing complexity and the raising generations come in and stuff like that. How do you can implement correctly this, let's say, new role in the advisor role in this ecosystem of the family? Because I can imagine, I mean, if just the family want to decide, okay, we want to pick up just these integrated advisor role, there will be a great opposition from the lawyers, from the tax accountants, and from all these, let's say, experts. I am correct with this?
I don't think so. I think at the beginning, they're not sure what this new role is. But it's like, why would an electrician be unhappy that there's a general contractor?
Probably.
Wouldn't that be good. No, the general contractor isn't going to do the electrician's job.
Yeah.
They are going to be the person that tells the electrician when to come. And here's what the client wants. And then the electrician says, look, I'm going to do what I do best. So Northwood Family Office, we are an integrated advisor. We're a family office. So what do? We engage lawyers, accountants, investment managers, insurance people on behalf of clients, or use the ones that clients already have if they're qualified and good. So I think it's just a very different role. Sometimes an existing advisor will be afraid or wonder. But if they're good at what they do, they're going to be a key part of the team. We just do different jobs. One's horizontal, one's vertical.
Okay. So I would say my perspective on this role of an integrated advisor is just more to execute the whole family strategy and vision to make it happen. And that is often quite difficult. And it brings me just to my next question to you in regards in this book in Wealth of Wisdom, part number one, 50 questions most wealthy family ask is, or what I'm often experience is many families actually don't know what they want. In most cases, their advisors advise them what they want. What is actually, from your own experience, the most common questions what you faced from wealthy families in regards to what they want?
Well, that's a good question. The most common, I think there's different answers. It, the most common questions people ask are not necessarily the best questions.
That's true.
They are ones where there is current pain, usually. And of all the top 50 questions in our book, Wealth of Wisdom, the top 50 questions wealthy families ask, the category that is most commonly asked, I would say, is about children and money.
Mhm.
And people are worried, people who are reading these books generally have money or are advising people who do. And families are, it's this bizarre situation. They've worked so hard to build up wealth, and now they're afraid that the wealth might be a negative for their children. Also a positive, but I think it's true that wealth is an amplifier of all things.
Yes.
It can amplify the good and it can amplify the bad. So I would say that's the most common question. But I think people often don't know the right questions to ask. And you alluded to this before. They don't know what their goals are. But they know there's things are out of control often, and there's no game plan. I think, and they don't often. Sometimes they'll say, we're a mess. We need some help. So in one of our Wealth of Wisdom books, the second Wealth of Wisdom book, which is called Top Wealth of Wisdom Top Practices for Wealthy Families and Their Advisors, my partner and I wrote a chapter 32, which is called, let me see the title here, Assessing Your Family's Financial Needs, Financial and Family Management Needs. And what we created years ago is a 50 question questionnaire self-assessment that families can go through to help them identify what the issues are that they're facing, because every family is different, although there are common elements
Right.
among many families. So we've got these 50 questions. It's actually on the Northwood Family Office website if somebody wants to see it, northwoodfamilyoffice.com. And there's a self-assessment quiz you can click, but it's got questions like, I know what my family's long-term goals are. And a family member can answer, yes, I feel I do. No, I don't. Or I'm not sure. Or the next question is, we've quantified the family goals and have a good idea of how much they will cost.
Yes.
Yes, no, not sure. And that's in the category of organization and planning. And then there's cash flow management and investment management. For example, I know what rate of return we need from our investments to ensure we meet our family objectives over the long term? My answer, I don't think anybody knows that. Nobody knows that, the answer to that question. And people can say yes, no, not sure. And what happens after you answer those questions, and there's lots about family as well. Our family has frequent, open, healthy dialogue about money and financial issues. Yes, no, not sure. But after you answer all those questions, you're going to see you're going to see a total. How many did I say yes to that I feel confident about? How many did I say no to? And how many am I not sure about? And my experience is that most people answer no or not sure to most of the questions.
Oh, really?
And yeah, absolutely. And even the ones they sometimes answer yes to, if you probe a little further, they really don't know.
Okay.
So, and it's not their fault. It's not that they're not smart. It's that they have never been what's the word? Forced, encouraged, invited to think these through and come up with a bit of a game plan for their overall lives, financial and family, and to identify these issues. And so, one is people look at it and say, wow, we've got some gaps that we'd like to fill. Overall, and if they have lots of them that they don't have yes answers to, that may be an indicator that you want to talk to an integrated advisor who can help you figure out what to do on all these things.
Yes.
In other cases, there's only one or two areas where they don't know feel they don't feel confident about, but the other areas they do feel confident about. So that might direct them not to an integrated advisor, but rather to a specialist in that particular area. So it's not prescriptive. This exercise is to help families figure out where the gaps are in their financial and family lives, and then where they might go to help fill those gaps.
So, can you give us just also on your description a little example? I mean, if you put just the family in a situation and walk through this questionnaire, right, and you get probably 40 no's and a little bit of yes, what is actually the output? Is it just that you say, okay, we will develop for yourself or with your for your family just a pathway, just a structure, just a just step by step. How do you come to a vision, to a strategy, and also, I mean, there is in many cases just trust is a very big issue, also inside of the family, right?
Yep.
How do you handle these trust equation, and also how do you come up just within, let's say, within pathway, just
Mhm.
sidelines that you can put for the family, just in the way?
Yeah, it's a great question. So when somebody fills out this self-assessment, and not every client that comes to us does that, it's optional, but mostly what it does is it exposes to the family themselves their areas of need, and often is a catalyst for them to move forward to say, we need help.
Yeah.
And then to find the right place to get help, whether it's an integrated advisor, family office, or if it's a specialist. If they if they and we determine that yes, these are gaps that we can help with, they sign up to become a Northwood client. So that happens first. They don't get a full report yet because we just know that this is what they feel.
Yes.
We don't know what the facts are. So let me just describe very briefly what our step-by-step process is, and that might help readers or listeners understand how we do it. And not everybody's exactly the same. So what would happen first is once that we agree on, we would have a discovery conversation where they tell us their story, and that helps us assess their issues, our suitability to help them, the scope of work, and ultimately fees, because our fees are based ultimately on the amount of work that we are going to do for a family.
Okay.
So, and then that's the point at which they would sign up with us. Once they've done that, we start our full deep dive discovery process. The first thing we do is we send them a list of all the documents we want them to send us. And that is everything. That is their wills, their powers of attorney, their investment statements, their life insurance policies, their family constitutions, their, prenuptial agreements, everything. And it's a stock like very high.
Yeah.
And maybe I'll just pause and talk about even trust at that stage. It's very interesting. Why and how would somebody be willing to do that early on? And people always ask me, is it difficult to get people to share their personal information? And on average, the answer to that question is no.
Oh, really?
And I think the reason for that is they, it's a little bit like going to the doctor.
Yes.
And if you go to the doctor and say, I have this pain, and he said, and he or she says, well, tell me more about it, and say, oh, I'm not going to tell you. You can't, you won't get fixed. So I think people are coming and saying, look, I found somebody, I have to give them the whole story. Well, why would they give us the whole story? Well, partly because we don't have any product to sell. We have no agenda but to help them. Nobody else pays us but the client. So they know by our structure and by referrals from other advisors who might have sent them our direction that we have a trustworthy model and we have 22 years of being, having trustworthy relationships with families. Now, trust has to be earned by experience,
Yeah.
but at least they're starting out knowing, look, this is like going to the doctor, and this doctor is not trying to sell me, a particular pill. This doctor is helping me figure out what we need and will help us sort that out. So they send us all this information and we read it. Now, nobody has ever read all of their documents in one sitting before. They were all produced at different times by different separate advisors. Nobody's ever read them all before. So just by doing that and pulling it all together and asking questions, we have an amazing picture of their situation. And then we have them come into our office or we go to their home. And again, I'm using the example of a husband and wife couple, but it could be a larger family, and each family we would approach differently depending on their structure and their dynamics. But if it's a husband and wife, we would bring them in and we would talk through some of the data that they've given us. But oftentimes families don't know. We'd say, why did you structure it this way? And they go, I don't know. So they give us permission to talk to the other advisors, and we say, why did you structure it this way? And that person often will say, here's the background, and go, oh, that's really helpful.
Okay.
So when we have the family sitting with us, we ask them a whole series of questions because we can't say, what are your goals? Because a lot of people don't really know. They haven't ever really thought about it. So we ask a series of, I'll call them kind of backdoor questions that help people get there. So one of the questions I like that we ask is, what are the best three things you've done for yourself and your family in the last 12 months?
That's a great question.
And we wait an uncomfortably long period of time until each of the couple, husband and wife, answer the question. Three examples. And the funny thing is, even though they might have come to us thinking, oh my gosh, we just sold our business, we need investment help, it's rarely financial things they mention. They might have said we sold our business. That was one good thing. But often, I lost 20 pounds. I've been working on this for a long time. It was a great year. Or we took the whole family to, the Caribbean. For the first time since COVID, we were all there. That was one of the things. And once they've answered that question, we say to them, how do you want to answer that question in 12 months?
Mm.
So what we're doing is we're helping them, one, figure out what might be some of their goals. And some of their goals cost money, and some of them don't cost any money at all. But we're also teaching them, as we ask these questions, that the point of this whole exercise is to help them identify and ultimately achieve the things they want. It's not to beat some kind of financial index. It's not to necessarily make more money than somebody else. the point is, what do you want in your life? And we're teaching them by this exercise that the goal is not necessarily a money goal. Money is a tool to
Right.
help you get the things that you're identifying are important to you.
Yeah.
And then we take all of that, I'm almost done. We take all of that information and we create a 50-page document completely personalized to each family. Like if people have ever been to the Cleveland Clinic kind of medical uh, um, place where you go get a full analysis of every part of you. It's a little bit like that, and it covers every aspect that's covered in all these questions. Some of the answers are simple, or some things are urgent. Like if your will is 20 years old, that's urgent. And some of them are going to take a lot of time and thinking, but we've identified all of the areas, and then the rest of the relationship is us working through all of those things. And can you see, and can your listeners see how different that is
Yeah.
from going to somebody to get your will done or going to somebody to buy a private credit fund? Those are tools that go into the picture, but the role of the integrated advisor is to pull all these things together and make sure the key things are identified and they get done.
Absolutely. I'm absolutely with you. And I can tell you just from my own experience. I mean, if you are asking just a family, what the whole world is asking just in regards, what is your purpose? What is your legacy? In many cases, you look in empty eyes, right? They don't
Yes.
actually. What is it actually? But if you are just flip the coin a little bit and say, okay, how you can stay relevant potentially? How do you can stay significant? Because as an entrepreneur, if you're running just a business, you are very focused on that you are relevant for the marketplace, right?
Yes.
And that brings me also in the second part of our discussion. Just I will pick up just you just for a little outlook, and I will pick up your opinion. I mean, that's not new. We are standing in front of, we are sitting in the middle of these very great wealth transfer, what we are facing on. And what is actually your opinion, your perspective on this wealth transfer? I mean, the whole world is talking only and only about the money. How many, what sum are will be transferred, and nobody is talking actually what does it mean actually for us as a society, but also what does it mean for the families, and by and large also for the individuals. What is your opinion and your perspective on this?
It's a great question. I have been in the wealth field for, if you can believe it, almost 45 years. And very early on in my tenure in the industry, this wealth transition, this great wealth transition, and driven by demographics and the growth of wealth, has been talked about forever. And it kept getting pushed out because people like us lived longer
Right.
than people thought we would or our parents did. And so this wealth transfer has always been this carrot out there that, is coming, it's coming, it's coming. But you're right. I think a lot of people spent a lot more time thinking about the financial implications than the human implications. There's a line that says, uh, there's been a lot more time spent preparing the money for
Mm.
the heirs than preparing the heirs for the money. And it reminds me of Jay Hughes' book that he wrote with Keith Whitaker and others about, I think it's The Cycle of the Gift, is the name of the book. And he talks about inheritance coming as a meteor smashing into the planet of the person's life. And how do you help people prepare? Because if you inherit substantial amount of money, it can change your life. It's a small amount, not much probably, but if a large amount can substantially change. And so the other thing I've learned recently is that the wealth transfer is going to be very concentrated. There's going to be a lot of money transferred, but it's going to be transferred to a very small number of very wealthy people.
Oh,
It's
really?
not a broad transfer. It
Okay.
is, just given the cost of healthcare and the cost of living and how long people are going to live. For a lot, people thought, I think a lot of folks thought that there was going to be the average family was going to have this large amount to leave to the next generation. And there's been some research that's come out even in the last year that shows that it's going to be quite concentrated in the hands of people who are already wealthy, which doesn't seem very fair. And back to your question about society, I think has challenges for society. But the real question underlying your comments, I think, really are what are we doing to prepare givers and receivers to handle this meteor that's going to crash into their lives? And Jay Hughes also talks about, I know he's been on your podcast, he also talks about, I think there's a statistic that says 80%, 80% of trust beneficiaries view the trust as a burden.
Yes.
So, and whether it's given in trust or outright, you know, that's a lot of people who somehow see this large amount of money as a burden. Whereas, was it given by parents and grandparents to be a burden? Of course not. It was given, well, it might have been given to save taxes, or it might have been given because they couldn't think of anything else, but often it's given as a gift of love.
Yeah.
And
Yes.
yet it ends up being this challenge that is inheritors have to deal with, and mom and dad and grandparents have often not even talked to the children, the receivers, about this. So, is there a better way? And I think there is an emerging realization, recognition by some thoughtful people in the industry, including Jay and Jim Grubman and Dennis Jaffe and many, many other very good thinkers, to address the human side, the human capital, not just the financial capital. And how do we become a learning family? How do we prepare the next generation for the wealth and prepare them to be not only ready to handle it, but to make it something that is a positive in their life.
Yeah.
And so we spend a lot of time with our families in family meetings, helping to develop them as learning families, helping to help parents decide when to disclose to children, and talking about not just amounts of money and structures, but values, what's expected, what the children want.
Yeah.
And you probably heard people say the best two gifts you can give your children is roots and wings. So roots meaning love, self-respect, self-confidence, stability, and wings is the opportunity to make your own mark and get out from under the shadow of successful parents and find your own way. And if we can help our children do that, whether you have money or not, it's a beautiful gift for their life.
Absolutely. And if I can offer my opinion just on this wealth transfer, I mean, I'm totally with you that these first wealth transfer will be quite concentrated. But from my point of view, we are standing just in front of the second wealth transfer, and that will be not only concentrated; it will be just more on a broader scale, and it will be quicker come if we consider, because we see an increasing amount of more and more families of wealth, and they are become more younger, and the family from the past will be have nothing to do with the family of the future, and that's the main and interesting thing. And that brings me just to my final question for today. And before I forget this, I will put all these links to your books and also to the article in the show notes, that the audience have just the opportunity to download all these information. And my final question for today is, Tom, it will be a little bit challenging for you. If you and I have just the opportunity to schedule a meeting 500 years from now, what will be your perspective on the families, on the society, and also on this topic of wealth?
My gosh, 500 years. I better get that in my calendar so I don't forget the meeting. 500 years is unbelievable. It makes me think, what was happening 500 years ago.
Yeah.
So how much has changed, not just in, 50 or 60 years or 20 years, but 500 years. I'm very interested in language, and I'm listening to a podcast called The History of English, and I'm on podcast episode 189.
Oh, really? Okay.
And we're up to the 1600s.
Oh,
So we're working through the history of how English language came from the Indo-European steppe land and has now we're into Shakespeare.
yeah,
And so much has happened. It's very, very difficult to know what would happen in 500 years. But partly depends if you're an optimist or a pessimist. And the the if the trends, if the current trends continue and people are recognizing that there is much more to life than just the financial aspect of life, I would be hopeful, let me say, that it would be much more natural to be thinking about wealth as something beyond just money.
yeah,
But rather, we would think about it as part of our wealth is, you know, stability, um, community, uh, faithfulness, grace, relationships with our family, but also with the community that we live in now. And I think the world is actually currently challenged in today's world to think about, what does it mean to live in community? And I think we're in a dark time, I would say, in the world where I think a lot of those values are being reconsidered.
yeah,
And I think it's so I'm hopeful that some of these trends of understanding human capital as the core elements will be valued even more than they are today. And I guess you won't be around to check if my answer is right, and neither will I.
I mean, your view and your outlook will be appreciated, and I will end our discussion just with my outlook, just for your
Please,
interest.
please.
There is a great request, and it is just our responsibility that we have a strong foundation. Also, 500 years ago from now, is we as advisors should be encourage the families to come together as a tribe, as a strong tribe, because we need these families because they have a lot of power in their hands, and they will have more power in their hands over the next couple of years, right? And coming back to our initial point from our discussion, these you have described as if you are building just a house, you build up just a strong foundation. This is just our legacy, our responsibility to help these families to build a strong foundation. And what I mean by this is just what I see often is that we make things so complicated for the families that they don't understand the things. It's more often for in the interest of the advisor, not in the interest of the family. So making us a little bit step backward and say, okay, how we can make things easier. Yes, there is a lot of complexity around this, but make things simpler to understand, to implement, and encourage. And that is just, I'm totally with you. Be more concentrated on the qualitative capital side. I mean, money is, in the end of the day, just rocket fuel. But you should be decide what is actually your destination of your rocket if you are starting.
That's right. Exactly right. And it's interesting. The challenge for advisors is I don't know if you know the term, the curse of knowledge. Because you're so knowledgeable about your area, which might be investments or tax or insurance, you assume that people understand what you're talking about because it's so familiar for you. But part of the job we find we have as integrated advisors is that part of our job is to take complex issues and put them in context of real people's lives.
Right.
And there's a translation role, and there's a a clarifying role and tying back to goals. Yes, we've heard all the technical about this particular subject, but why are we thinking about this? Well, because one of your goals is this, and this feeds that goal. So I think you're exactly right. It's a very important role that advisors can play.
Yeah, and that is just also my last sentence for today. And what I mean by this is also that we as humans like system and structures, right? And if you we won't see any system and any structure, we are uncertain. We are come into chaos, and that should be also our responsibility as advisors to not working as in silos, because there are so many exceptional advisors out there, but in the end of the day they act just as a silo, right? And coming together and putting the heads together and say, oh, okay, how we can build up just a system, a structure that is reliable and help families to survive over the next 5 or 7 generations. And then vice versa, we as a society, we have a great benefit of this. So, Tom, it was a great pleasure. And it would be also a pleasure for me and for the audience as well if we continue just to talk on a second call. And so for now, many, many thanks. Very appreciated. And it was refreshing.
Great. Thanks very much, Jan. I really enjoyed the conversation.